What's up guys, Raymond here with another financial statement analysis video. This is going to be episode 14 in our German energy stock financial analysis videos. I believe this is the second to last. Let me just quickly check. We have Waka Chemie and we have the last one after this. So this is the second to last video that we're going to be doing in our German material stock financial statement analysis videos. Without further ado, let's get into it. If you're new to my financial statement analysis videos, what we do in these videos are we analyze the top 3 financial statements relevant to a company, those being the income statement, balance sheet, and the cash flow statements. We look at the key factors of each statement. We attempt to come up with an overall idea of the financial strength of a company as well as its financial future. Without further ado, let's get into the key ratios. The starting point will be the market cap, which is the overall price of the company to the public market, which is 7.63 billion euros, which is good. The revenue figure is the overall sales of the company in the last financial period, which was 6.21 billion euros, and the dividend yield, which is the amount of cash from earnings or from profit that the company paid out to its shareholders, which was 5.47%. The P ratio is the price to earnings ratio, so the overall price of company, the price of the stock divided by the earnings per share, which was 8.97. The earnings per share was 16.3 euros, so the company earned 16.3 euros for every share that is outstanding. So let's just check the share price. So that's over 10%, which is really good. The beta level is the overall risk level of the company. The average risk level, or the average beta, is 1, so 1.25 is 25% higher than the average risk level. But then again, we're in a economic period where there's massively increased inflation, as well as massively increased savings from citizens. So we're not in the most stable economic period. So a lot of stocks have taken a hit. So we can expect, or we have expected, and we have seen a lot of stocks taking quite a substantial loss. Let's get into the income statement, which is the first of the 3 financial statements. So as you can see, the light purple figure is the revenue figure, or the overall sales figure for the 2019 financial year. It's quite high, but the dark purple figure, which is the net income or the profit that the company made, the amount of money that the company made over its revenue, or revenue minus expenses, was negative. So it spent more money than it gained. So more cash went out of the company than what came in. So that's why we have a negative figure there, which isn't very good for potential shareholders. Also, the 2020 financial year, the company managed to reduce its revenue, but it managed to get a positive net income figure, which is really good. The 2021 financial year, the company done really well. It had a very good transition, which showed that the company gained a lot of revenue, taking it above its 2019 financial year, as well as its 2020 financial year, by quite a substantial amount. And it also managed to have a very strong net income. It looks around 10%, which is really good. Let's get into the balance sheet, which depicts the company's overall liabilities, or overall debts, compared to its overall assets. The light purple figure being the assets, and the dark purple figure being the liabilities. We always say a positive figure would be about 50% liabilities to assets. It doesn't look like this is the case. It looks like the assets are quite close to the liabilities. So the liabilities figure in the 2020 financial year, the 2019 financial year, is closer to 50%, around 65-70%. But the company managed to increase its assets by a small margin, but it also managed to increase its liabilities by an even larger margin, so it's even closer to 80%, which is really dangerous. But in the 2020 financial year, the company managed to do a really good job of increasing its assets. So you can see a consistent asset increase growth, consistent asset growth over the past 3 financial years. And it also managed to reduce its liabilities simultaneously, so that's very good for shareholders. I assume that this was reflected in the share price. The share price probably increased, but the cash flow statement is the last of the three financial statements that we're going to look at, which starts off with the net income, almost 1 billion euros, 827.8 million euros, which is really good compared to the 2020 financial year, which was 202 million euros, and 2019, which was negative 629 million euros. So it's consistent growth, a very, very strong growth actually. The cash flow from foreign operating activities was 1.06 billion euros. The cash flow from investing activities, which is almost always a negative figure, was 639 million euros negative. 321 million euros, about half of that was spent on capital expenditures, as we saw in the balance sheet, whereby the asset size was increased quite substantially, and the overall so the rest of the cash flow from investing activities was spent on other cash flow items. Lastly, the cash flow from financing activities was negative 153 million euros, which went 99 million euros of which went to pay dividends to shareholders, which is actually quite a small amount of dividends to pay. That's probably why we saw such a small dividend yield. The issuance of debt was 43 million euros, so the company managed to reduce its debt burden by 43 million euros, which is really good. Foreign exchange effects, which is the impact of the currency, denominated currency increasing compared to exchange rate, which is 29 million euros. So the company gained 29 million euros in that regard, which is good. And overall net change in cash was 300 million euros, which is really good also. So that is the last figure, cash figure that the company has in its accounts. Let's check compared to the 2020 financial year. So the company managed to gain 110 million euros from 2020 to 2021, and from 2019 it managed to gain to 2021 it managed to get 100 million, so precisely 96 million. So that's a good overall increase, very, very steady increase from 2019 all the way to 2021. So that's very good. Overall, I would say the company is definitely good. It definitely has room for improvement, but it's definitely showing a consistent growth there. But without further ado, I'm going to close this video. Thank you guys for spending your time to watch it, and I will see you in the next one, which is our last of the German material stock financial analysis videos. And after that, we'll be starting our industrials sector. Thank you guys for watching again. I will see you in the next one.